Hello my fellow freedom builders and welcome back to the channel to a video about sector rotation. Now I know that sector rotation might not seem like the most exciting topic in the world, but it is an important thing to keep an eye on if you want to be in the right stocks at the right time and you want to time the market a bit. Now what is sector rotation? It is often mentioned in some boring Financial Times articles with some analysts saying that I think the recent drop in prices is because of a sector rotation into something. But what is it really? Well, the stock market has different sectors, and you can see here I found this graphic. There are some healthcare stocks and some energy and utilities and financial services and technology and transportation and so on. And what we can see is that there is a tendency that the different sectors have different good times and bad times depending on where we are in the economic cycle. It could be in the early contraction when we are moving down in speed in the economy. We can see that consumer staples here, utilities. We are moving into a late contraction where often financial services, consumer cyclicals and so on start to move up. And we have this wheel that just keeps rolling. Of course, this is not cut in stone. It is not definite that it should always be like this, but it is something that have been observed over many decades. There's another graphic here showing a bit more of it. And here we can see we have the blue cycle, which is the economy, and we have the red cycle here, which is the market. And the market and the economy is not the same. You might have noticed that. So what we can see here is that when we have the economy going up, at one point the market has been going up for too long and it starts to drop. And of course it does not drop or rise in such nice fashion like this. It is choppy and messy and muddy and everything. But this is just the theory of it. And what we can see here is that when we have the early recovery and we are getting into a almost full recovery, the market starts to top off and we start to drop. And at some point we have a bear market and a late bear market, and then we have the full recovery and we start to get into a recession. And I know this situation in the market is a bit special because of the virus and everything in the spring, but I can tell you that we were pretty much here before we had the virus in the spring. The economy was tipping over. I know that some politicians in United States tried to tell everybody that it was the strongest economy ever. And what we could see is, and that was from the GDP numbers and so on, that it was starting to tip off. So this virus was just speeding it up. And we had this bear market, and we will try today to figure out where we are in this. And to do that, I'll have a look at some sectors and a tool that I use a lot. It is a tool I have developed for my Danish subscribers. Oh, sorry, just a second. Here we go, and I am sorry that some of the text is in English, is in Danish for those of you that speaks English, but I hope you can understand it. The sectors are in English anyway. Out here we can see what is called the market timer special relative strength, and that is a relative strength calculation that we have made where we are looking at all the stocks we follow in each sector and see what their average relative strength is. And what is interesting is not only to see how strong they are, but also in what direction they are moving. And for instance here, we can see that we have utilities, which is moving very much to the positive side. And when we're looking at that here, we can see it is fairly high in the little schedule here, and we can see that it is moving up quickly. We can also see that utilities down here, they have 34 there are 34 new stocks that are above their 20-day simple moving average, and it basically seems like a sector that is moving upwards quite quickly. Now this is of course just a movement for 1 week, and it can turn down again, but let's just have a look at here where we can see the utility, healthcare, utility and finance is at an area here in the late bear market where there's still some bear market to have, and in the early recession, meaning that there's a lot more recession to have. So that is interesting if we can start to see utility really moving upwards. Now what can we do if we think that is the case? If I over some weeks can see that yes, utilities are truly moving upwards, well then we can look at this tool here, and we can try to see if there is some steady trend here. And let me just see here, we have the utility, and this is also the relative strength, and we can see over the summer here it was moving up, a bit down, but overall there's a good upwards trending in the utility stocks here in the relative strength scores. So this actually shows us that yes, it is, or it might be some a part of a larger movement upwards in the utilities. Now, if you want to find some stocks here, we can go into utilities. We can see here the red line, that is the relative strength, and it's all starting to point upwards. And in each sector, there are some industries. And as you can see here, in the utilities, there are alternative power generation, electric utilities, gas distributors, and water utilities. Now, if you want one with a high relative strength score, we need to pick one of the top up here, and maybe we also want some good movement towards stocks being above the 50 simple moving average here. So that is the vertical line here. Now we could choose this one, and that is the water utilities, and we could choose this one, which is electric utilities, just to pick two. So water and electric utilities. Now let's have a look at this water utilities, because we can go a step further, and we can see in here in the utilities, we can see this green zone here. Up here we have the Q score, that is our own score as to how solid the company, the fundamentals in the company is, and we can see down here we have the relative strength. So when picking stocks in the green zone here, we are both choosing stocks that are at a good Q score, above 6 or above I should say, and we are choosing stocks with a relative strength score of better than 60. So what we can see here in the utilities, we can see that we have some Eolus wind here. Now I have taken the entire universe of stocks, so we also get a Swedish stock here, Eolus wind. It is actually in my portfolio right now. We also have the WEC Energy Group, and we have some American Waterworks. So let's have a look at the just the two here, the WEC Energy Group and the American Waterworks. Let's just have a look at them. We'll go into this little schedule here and try to see if we can find the WEC Energy Group to see if that is a reasonable stock to invest in. And we can see that they have a 6.4 in the Q score. That is fair enough. They have a 75 in relative strength score, meaning that over the last 1 and 3 months, they have been doing better than 75% of the stocks I am looking at. We can see here that the volume is moving up nicely with the price. We can see that the relative strength score for this stock in particular is moving up. We can see again that the utility here and electric utility is doing fairly well. So this one is actually a stock we could pursue a bit more and look into. We also have the American Waterworks here. Let's just have a look at that one. That is 6.2 in Q score. That is nice. We have a 78 on relative strength score. Also very nice. Volume is moving up along with the price. We have the relative strength score here. Water utilities and utilities, everything is looking good. So these two stocks we could actually dive further into. So let's have a quick look just at the graph to see what that is telling us. And over here, in TradingView, well, right now you can see I have put my chart on the XLU. That is an ETF covering utilities. And as you can see, we are not in a true uptrend yet, but at least we have been finding some sort of bottom here. But it also seems like there's still a bit of drop in price here. So if you want to just, instead of pursuing single stocks, just finding an ETF, there is the XLU, which is the utility ETF. If that breaks up above this 62, 63 line here, we might be in a good further uptrend where we could simply just buy the XLU and see if that could keep this trend. But let's have a look at the two stocks we were looking at before. We have the WEC Energy Group, and again we see actually the same pattern with a deep bottom down here, and then starting to see higher bottoms and higher tops here at the weekly chart. Let's just make sure that we are comparing with the right market here. As you can see, we are not 100% in green zone yet, and if you have been following my videos, you know that to be in green zone we need the RSI to be above the 50 line here, the red dotted line, and we need this CRS, comparative relative strength, to be above both its moving averages here. So it just needs a tap more here before it goes into green zone, but it is something that we could have a look at. It's a good solid stock, as we saw, and it has begun on a daily chart to move up in a nice pattern here, and right now it is above its 20 moving average, and I would like to see just a bit more movement upwards. But absolutely, if you think that utilities is the way to go, then the WEC Energy Group here could be one to go for. We also have the American Waterworks here. And this is actually in a green zone right now. You can see the comparative relative strength is above the two moving averages here. We have the RSI above the 50 line, and we have a fairly solid uptrend here. Of course, it is disrupted by the crash here in February and March, April. But again, if we try to not see this, because that was an overall market crash, then we actually have some very good straight lines here with a trend that is going up. We can, if we want to look for patterns here, we can actually draw maybe a little, what is called a bull flag here, where we can see the price is moving down in an orderly fashion here and breaking up. So the American Waterworks, again, if you think the utilities is the place to go, then the American Waterworks might be the place to go. Also, we of course can jump into the Stockopedia that I always use to see the WEC Energy here. You can see it has a stock rank at 77. I do like that to be above 70, so that is fair enough with good momentum and good quality in earnings. The PEG ratio is a bit high, meaning that we do have the PE ratio of 24.5, but divided by the estimate for growth for next year, we only get a 4.2 because it is divided by the 6 here. So this is not, I do like this to be below 2, but let's just run with it here. We have return on capital, return on equity, and operating margin that looks fairly nice both towards the industry and the overall market. We can see the earnings per share is moving up nicely. It is in the gray zone on the Altman C score, so we might see that on the debt part just in a second. We can see that the cash flow is kind of jumpy. I'm not too fond of that. They are paying a dividend at 2.5%, and it is growing. They do have a bit low dividend cover for my tasting. I do like that to be 2 or above, meaning that they can easily pay their dividend. You can see here that they had a free cash flow of 26.7 cents, but paid out $2.36 in dividends. I'm not too fond of that, to be honest. And we can see that the net debt is growing. And the interest coverage here is not impressive. Current ratio, quick ratio also way too low, but there might be some specifics here according to the structure of the company that can move these numbers a bit, and sometimes we cannot take them for what they show here because the structure of the company is a bit different. We can also look at the American Waterworks here and let's see what we find out. It has a stock rank of 54, which is not impressive. It has okay momentum and quality here, but the value is kind of low. We're not looking too much at the value part right now. You can see that the PEG ratio is also above 4, which is not my complete favorite. Return on capital, return on equity, and operating margin are okay. Petrosky scored 6, and again in the gray zone here. You can see that their earnings per share is growing nicely. We can see that their free cash flow has gone negative, and that is definitely something that would raise some red flags with me and something I would have to dive into. Just by looking at this free cash flow going more and more negative, that would be kind of a deal killer for me. But again, there can be different explanations, and I would have to dive deeper into the company. They are giving a dividend at around 1.5% here. A bit higher dividend cover than the previous stock, but still they cannot pay the dividend with their free cash flow, so they have to go out and find that money elsewhere, maybe borrow it, maybe liquidate some assets. I don't know what they can do, but as you can see, they have a working capital that is negative, which is the sign for me to run away pretty much. Net debt is growing pretty quickly, and again, the numbers up here are not amazing. Again, there can be structures in a company like this, a utilities company. There can be different structures than that. There is a reason for these numbers to be a bit skewed. So these two companies would not pop up on my normal scanner to tell me that this was the way to go, these were the stocks to invest in. But if you're not looking too much into this and you want to position yourself in a sector that you think will be the winner over the next months or maybe half a year, then you might have to look at utilities and you might find stocks like this. Also in Stockopedia, of course, you can scan for different sectors and different industry groups, but I'll not spend time on that today. If you, instead of wanting to find specific stocks, if you want to find ETFs, I showed you one, the XLU, but we also have on the etfdb.com here, you can just search for utility ETFs list, just Google it, and you can see there are plenty of ETFs with quite a lot of asset under management here. They're quite large, these big sector ETFs. So that is definitely something you can have a look at as well. Remember, I'm not saying that utility will be the winner. I'm saying that in our scanner, in our sector scanner here, it shows us that the utilities is moving right now, and we try to find some stocks here in our quite small stock universe. We don't have a ton of stocks in here. We have 500 or 600 that we're looking at. So of course we didn't find too many candidates here. But if you are using something like the Stockopedia, you can probably find hundreds of utility stocks, and then you just have to dive deeper and find out if they have the fundamentals and if they have the technical graph picture that you want. I hope this was a bit of an inspiration. Remember, I'm not a financial expert or advisor in any way. I'm just talking about stocks on YouTube. So if you like what I'm talking about, I would really appreciate it if you hit that subscribe button, the like button, every button you can find down there below the screen right now. That's all for now. Take care of yourself and your money out there, and I'll talk to you again very soon.